Hello friends, welcome to Backward Tradester video number 4. Today we are going to talk about Nifty trading options day 4, and we are going to look at what kind of strategies that we use to trade on day 4. And before we start for today's day, I'll start with the disclaimer for today. The video is created only for motivational and educational purpose, not a SEBI registered advisor, not providing any kind of recommendations for either options or stock trades. Please consult with SEBI registered advisor before investing. Guys, we have seen 3 videos, 3 days, and the first 2 days we were in a profit, and third day we booked a loss of 4,000 in 2 trades. Let's see how our day 4 trading has gone, and I thought of putting the video as early as possible so that you can see how our viewers have traded for the day and understand what kind of nitty-gritties they faced in today's options trading. As I say, I just want to document what kind of strategies that we use for naked options buying or naked options selling. So since we started trading just for 3 days, I've come up with the strategies that I used for naked options buying. Number one strategy that I used was use 15-minute candles for Nifty and wait for the second 15-minute candle to close, and then trade in the direction of the market. For example, the Nifty starts trading at 23,200 and it went up to 23,300 in the first 15 minutes. Both the consecutive candles are indicating they are moving upwards. Then it's a clear indication that the market is going to head upwards with the stop loss below these starting price of the first candle. So that's where our stop loss is, and the target is easy 20 to 50 rupees on the options price. So to beat the delta, which is the difference in the option prices, we would stick to options which are ATM or ITM, no matter whether it is a call or a put option. That gives a better risk coverage if your accuracy of your identifying the market direction is more, then the probability of you making a profit in a quicker time span is more likely to happen when the delta is pretty good. So a delta for any options trade that you do should be at least 0.5, so that if Nifty moves by 1 point, the price change of the option would be at least 0.5. So if Nifty moves by 100 points, you can easily achieve 50 rupees, which is very likely to achieve in the options trade. And the second strategy that I identified in the Friday's trade, but I haven't implemented it, but I am documenting it so that it gives a clear indication. For example, if you're confident that you don't need to wait 30 minutes to make a trade, and the strategy 2 will come in place. If the market is trading in green, opening in green, say for example, the market is opening 60 points up, but if you look at the put option prices, they are all not falling drastically. Either they are not falling drastically or they are trading in green, which is a very rare scenario. Ideally, when the market is green, the put options will be trading at a discount, which means less than the previous day's closing price. Likewise, if the market is trading in red and the call option is trading in green, then it's an indication to buy call. So in these two situations, which happens very rare, but I could see that's happening in the market quite frequently nowadays because of the volatility in the market. So I would strongly encourage you to I would strongly encourage you to analyze and consider strategy number 2. Likewise, if you come across any strategies that you use for naked option buying or selling, please add it in the comments so that other viewers can also see and understand what are the different strategies that a normal options trader, a common man, can use to increase their profit potential. And also I documented some of the rules to be followed. Always have stop loss. Like any other trading classes or any other videos, stop loss is very critical because that will eat your entire portfolio. The one key thing in the market is to preserve the capital that you bring into the market. That's the most fundamental thing. and don't average. That's what I would recommend generally, but I do average in certain cases where I strongly feel that the market is just fluctuating but it's going to be in the other direction, and in those cases I average to make a better profit returns. And the number 3 goal is don't ever break your strategy. But when you find that your strategy is not working consistently, then you need to find what is not working, and you need to fine-tune your strategy over a period of time. We'll go through those strategy building and how we fine-tune our strategy and how we improvise our trading opportunities on everyday basis. And don't do multiple trades in a day. Stick to 1 or 2 trades in a day, and not more than 20 trades per week. That's the fundamental goal of making much more money in the market. If you do multiple trades, the probability of you losing money in the market is very high. So in options or in stock market, we always talk in the terms of probabilities. So to be you're in the market not for excitement. Money making is the boring stuff. If you know the trick, you need to do the boring stuff again and again. Just sit simple and make money. That's it. Okay, let's go into today's trading, what I have done and how that has spanned out. Let's go into today's trading. So today the market opened red. The market was at least 150 to 200 points down when it opened. And if you look at, I'm just putting today a different parameter and just to test my strategy, how it works in 10-minute candle. So today I used a 10-minute candle, and a 10-minute candle, it was trading upwards. Like even though the market is red, the 2 consecutive 10-minute candle closed above the closing price of the previous one. So I made an entry here, somewhere here. I made a limit order, so the trade got executed here, which is 16 Jan 23,000 call, and from 23,000 call I made a profit of at least $11,000. I made a couple of trades to get that. The first trade was the market was fluctuating. I entered here, the market went down, then I averaged a bit, and with the minimal, we have a very minimal capital of 29,000, so I need to trade within that capital, and I exited at 40 point coverage. Let's see, look on the trades, what I did. So the orders, I just placed 2 orders. First, I purchased a call option at 133, then the market went down 15 points, which is close to I had a stop loss of 101, but it went to 118. I thought like the market is anyways going to go upwards based on the strategy that I have identified in the last few days of trade. So I increased my lot size. So instead of 2 lots, now I had 3 lots, and the average price comes around 127. So I had a 40 basis point target, and within no time it was good to see at the entry price. If you look at the timings, within say 20-30 minutes this target is achieved. That helped me to get a profit of 8k, and again the market was dropping very fast, so I thought that's a very good opportunity. If you see here the time gap, it's just 3-minute time difference, and again I got it for 147, and I don't want to take more risk today, so I exited at 20 point coverage. So these are the 2 trades I did today, and in terms of profit, what we are heading at 11,748 rupees as a profit, even if you ignore 750 rupees. So 11,000 rupees is a net profit that we got. Now we are with the 25,000 capital. On day 4 we are at 40,000 rupees. We are doing very well so far. I would like to request you, if you like this video, please add your comments, please subscribe, and let me know how these videos are useful in helping you to devise your strategies, how to be successful in options trading. Thank you for watching. Please subscribe, guys.